Hello.
Good evening, guys. Good evening. Let's just give it a few seconds for people to stream in. But welcome to yet another weekly forum with Smartkarma. So glad to have you guys on. And I'm really excited. We've got two of our great analysts on the forum with us today as well. There's Nick van Broekhoven and also Osbert Tang. Nick's dialing in from Singapore and Osbert's dialing in from Shanghai. And you know, our attendees are of course dialed in from everywhere. So maybe just while people are streaming in, I'll quickly sort of run through the topics for today. So there's three things on the agenda. We are going to first look at our small cap idea for the week, which is PC Partners. This is a hidden cryptocurrency champion that's listed in Hong Kong, and Nick will talk about it. After that, we'll talk about a very interesting new development, which is the REITs market in China and how investors can pre-position or front-run that entire development through currently listed companies. And then third, sorry, the REITs topic will be introduced by Osbert. And then lastly, I'll give a very, very brief summary of why we think very few people or almost no one is actually positioned for a recovery. That's quite an interesting topic. Without further ado, just quick disclaimer. So this particular forum is strictly for Smartkarma Plus subscribers. It's only for informational purposes. It's not investment advice. The opinions are of Smartkarma's insight providers, and not sort of any one of us at Smartkarma. And lastly, quite importantly, Chatham House rule apply. So please do not share this or any of this material on any public or social media settings. Perfect. So let's move on to the first idea. And this is a PC Partner, as I mentioned, and this is a hidden cryptocurrency play. Nick van Broekhoven's been covering this company for quite a while on the platform. And as you can sort of see from this chart and also the next slide that I'll bring up, it's quite bombed out. Nick will run us through the thesis and catalyst. Nick, over to you, sir.
All right, thanks, Reg. Yeah, I prepared just two slides. This is the chart in the last couple of years. You know, year to date, stocks more or less flat. Market cap's about 140 million US dollars, so about 800 million Hong Kong dollars. Stock closed today around 2.4 Hong Kong dollars. So then the next slide. So this is because, you know, in the interest of time, I've just condensed everything on one slide. I've written about the company on various occasions over the years. This is definitely a trade, and I think the stock has been moving up in the last few weeks. You know, rather nicely, and I think there's a few reasons for that. So first of all, what does PC Partner do? They're graphics processing unit, so video graphics card manufacturer. Just as you would have that with the automakers, for example, Mercedes as AMG and BMW as M, that they basically optimize the performance of their cars. And with the GPU units, that's also what PC Partner does. They optimize the performance of GPU units that are made by NVIDIA or AMD. It's particularly NVIDIA. So it's a kind of a poor man's way to play NVIDIA. They've been consistently profitable since 2008. They had an IPO in 2012. So every year that they have listed, and before that as well. So in the prospectus, you can see that they're always profitable. I mean, in 2019, barely profitable. But still they had profits. And so what's interesting now is that actually the lockdowns which are happening, you know, still across the US now, across Europe now, are actually quite beneficial for all gaming demand. Even Lenovo had some comments around that recently, saying that you know, desktop gaming was really a big driver for them. Combine that with launches by NVIDIA and AMD in the last 2 months of their latest GPUs. And this is really creating a very strong demand in the market. So market conditions are very tight. PC Partner is going to benefit and is benefiting from that. And this will come out in their you know, the full year results. Their second half will be much stronger than their first half, and also in the first half of next year looks quite good. Then on top of that, Bitcoin miners are heavy users of GPU. and they wear them out very quickly because they're continuously churning 24/7. In the last Bitcoin bull market, this stock hit 7 Hong Kong dollars. I wrote a little piece about that on the 22nd of October on the platform, so you can go and read it and you can look at the chart. How it basically lags the Bitcoin rise over the 3 to 6 month lag. And I think there's a very high chance this happens again here once the market realizes that they're a beneficiary of the Bitcoin rise. And so with Bitcoin, 18, 19,000, this is really going to again drive the Bitcoin miners to invest in GPU capacity. Then in 2019, they did an investment in data storage near Shanghai, so that's a new area of growth. Market has kind of ignored that because they have had some issues last year they're doing it in a joint venture partnership. So I think as of 2021, that will come back as a growth driver. There's almost certainly going to be a profit alert coming in next month, end of next month. So that will be, I think the market could then notice again that this company is going to be way more profitable than people expect. So I expect for the second half of this year, sales will increase by about 43%. I put there, in the slide, you can see the gross profit that they made last year, what I'm expecting for this year, and then especially also operating profit was tiny last year and will be substantially improved this year. There's little to no sell side coverage. The little that has no growth for 2021, 2022. I think that might be too conservative. So basically the market is not pricing in there's going to be massive growth here. They were very indebted in 2018 because they had a massive inventory overhang after the last Bitcoin run. And a kind of failed launch by NVIDIA by one of their GPU units at that time. But this should now go back to a cash position next year. And historically, the company, whenever they've made good profits, they've always turned out 30 to 40% as dividends. So I think this year they will have earnings per share of about 60 cents and dividend per share of about 22 cents. So at the current stock price, it still gives you a 9% yield. Historically, this is traded between 4 to 6 times PE, so 4 on the low end, 6 at the high end. So even if you do it at 5 times PE on this earnings, it's a 3 Hong Kong dollar stock. This excludes any multiple expansion. Historically, it's traded that way. Could it be higher? Potentially, but historically it's been traded between 4 and 6 times. So I see a question, why is it only 5 times? Because historically the last couple of years it's always been traded between 4 and 6 times. So I'm just using 5 times multiple. I think it's very low, so it's very conservative. And when the company does well, usually the stock will outrun this multiple, so be trading at the high end. So if you just assume 6 times earnings, the stock will be at 3.6. So it's still quite a healthy upside from where we are now. If the market starts treating this like a Bitcoin proxy again, I mean, maybe we revisit the 6 to 7 range that we saw in 2017. So that's basically the elevator pitch for PC Partner. I'm happy to answer more questions.
Nick, I wanted to ask a question on sort of behalf of some of the attendees. What's the background of this company? I mean, one of the issues with investing in small caps, let alone Hong Kong small caps, is parentage or lack thereof. So could you talk briefly about how this business started, how long it's been around, and so forth?
Yeah, so it's been around, at least almost 20 years. And so these guys came from the industry, so they have been all their life the founders. Actually, the company was founded by 2 main characters. One of them, if you go through the filings, and also I remember you asking me about a few years ago, there was a big block trade by the company. That was the wife of one of the co-founders who had passed away, and she wanted to exit the company. So now there's only one of the founders is only left in the company, so they're a big shareholder still. They've basically come from the industry, from gaming processing units, and that's just that's the only thing they've done and they've known how to do. So I think, yeah, I mean, their interests are clearly aligned. I followed them for a few years. I haven't seen anything that they've done that is peculiar or would lead me to believe that something is going on here that would not be real. I mean, they're paying out dividends consistently when they're making good money. So I think that's the proof that the cash is real. And in my experience, the CFO is very approachable, is very good with sharing information with investors. But it is a very volatile sector. I mean, this is something that has cycles. So that's why I think people value it at a low multiple.
Understood. Fantastic. Nick, thank you very much. I like the rapid fire style of the forum. It's just meant to be 30 minutes. I think one thing I want to highlight again is how the criteria that we use to surface these ideas tends to be quite objective. We look at, of course, areas where we are very differentiated as a research platform, but we also look at what's trending across the user base on the platform, and also where there's some interesting price momentum or something quite unique in how some of these things are trading. So with that, I'll pass it on to Osbert. I'll just set the scene a little bit, Osbert, before passing the microphone over to you. But again, if you have further questions for Nick, I think Nick is going to linger around till 5:30. But I know Osbert's got another appointment, so I'll move there. Okay, so Osbert is based in Shanghai. He is a very senior infrastructure analyst, and he's covered a few different things, both on the credit side as well as equity side. He started talking about a very interesting theme, which was the creation of infrastructure REITs in China, which is, I mean, it sounds a bit bizarre, but that hasn't happened up until now, even though the REIT market is a very big market in Australia and in Singapore. So there's clearly a lot of market cap creation that lies ahead. And Osbert is going to talk to us about how you can sort of benefit from it right now. Over to you, sir. Osbert, just guide me and I will move your slides.
Yes, no problem. Okay, can you hear me?
Yep, all
okay,
good.
That's great. Okay, well, thanks everybody for taking time to join this forum. I would like to first highlight about the latest developments of the China infrastructure REIT, and then to see why they are beneficial to the total companies. I think starting off as a background, I think most of you will know that the CSRC in China as well as the NDRC has made official announcement of the commencement of the pilot program in public infrastructure REIT program back in April of this year. And follow that, actually we see that Shanghai and Shenzhen stock exchanges have also showed their support for the program. They announced the details of the listing of the REIT in these exchanges. Now, the priority focus in terms of the geographical area of this REIT project include the Greater Beijing area, like the Beijing, Tianjin, Hebei development area, the Xiong'an new area. We also have the Greater Bay Area, like Guangdong, Hong Kong, Macau, Greater Bay Area. And also another focus is Hainan as well as Yangtze River Delta region. One thing we need to keep in mind is that actually the REIT issuance will first be very much supportive for some key infrastructure facilities. This is actually named by the NDRC as well as the CSRC. Focuses will be very much on the storage and logistics facilities. Toll roads, this is one thing that we are going to discuss more in depth today. Commodity facilities like water, power, gas, and heat supply. Also that will cover sewage as well as waste treatment, which I have written another piece on that. So any interest, we can get into further details later. As well as information network, strategic new industry, as well as high-tech industrial park and special industrial park. So actually a quite wide range of infrastructure assets can be securitized. The interesting thing is that quite similar to other infrastructure projects in the world, they're also required to pay out 90% of the distributable profit to shareholder annually in the form of cash dividend. Now go to the implications. The key benefits will be, first, we see a lot of infrastructure companies, infrastructure projects actually are trading at below book and also below the NAV. So once they are able to, the company are able to realize the NAV through the issuance of the REIT, that will help the market to easier to price the underlying asset and reduce the discount to the book value as well as the NAV. This is the first benefit. And the second one is that through issuance of the REIT, the infrastructure companies can recycle the existing projects and then raise cash, so that allow the cash inflow to either lower the company's gearing or fund the new round of their infrastructure investment. So that's actually something that we can see to benefit the infrastructure company that are listed in China now. And then next page is we have some highlight about one company that we like. But I think before I move on to detail about the one that we like, the Zhejiang Expressway, we also want to highlight that we see this year overall the market has been very much focusing on new economy as well as high-tech company. But in fact, so far year to date, we see the share price of the toll road company still well below year on year. And at the same time, we see on the starting third quarter of this year, already most of the infrastructure projects, especially the toll road traffic, has been improving. And that also fall into China's very much focus on pushing the dual circulation, but it's actually increasing the overall domestic spending as well as consumption that is going to flow through in terms of more domestic travel, and that would also benefit the traffic for the toll roads. We'll move on to talk about Zhejiang Expressway, which we like among all the toll road companies. In examining which toll road company is best benefit, we look at three angles. The first one is that they have to have the lower price to book multiple. And the second one is that they have the higher gearing, because the higher gearing you have, actually you get more benefit from listing of the REIT. And lastly, the longest weighted average remaining project life. That means that the longer weighted average remaining project life, you will get more cash inflow by securitizing the projects. Based on these three criteria, actually, we found that Sichuan Expressway is ranked as the top. But in terms of taking into account the liquidity as well as the market cap as well as the size, actually think that Zhejiang Expressway is the best when compared with the other in the sector. Zhejiang Expressway itself is a below sector average price to book versus ROE ratio, while at the same time, although the company's PB is higher than the others, but it's still going to be more valuable based on the higher ROE the company has. The second thing is that we also see Zhejiang Expressway has the highest gearing in the sector, about 93%, that will make it benefit the most from the cash that they generate from the infrastructure project if they securitize and issue REIT. And lastly, although Zhejiang Expressway has not had the longest weighted average remaining project life, but we do see that it is reasonably at about 10 years. So combining all these factors together, we think that Zhejiang Expressway is the best in terms of the auto toll road sector that can benefit from the REIT issuance. Latest, in terms of the update, we found that the government actually has been pushing more in terms of the direct financing of the companies in China. So that actually will be a major push factor for more commercializing of the REIT issuance going into next year, which we will see when the overall framework has been going to be in place. I think it's going to be early next year, probably going to be after the NPC in March. And then that would see more flow of the information as well as more actual listing of the REIT, and that would be a very significant catalyst to the overall toll road sector as well as other infrastructure sector in China. So that's pretty much the rough idea that I have. I want to share with you in terms of the infrastructure REIT. I'll pass it through to back to the Rakev for this, any question or any follow-up.
Sure. Osbert, if I were to sort of distill what you explained. So first of all, the government came out with a new policy announcement in April. After that, the stock exchanges followed up on it. And now the companies are getting ready. And if I were a big investment banker, I would be actually, trying to pitch for these listings going forward. And in terms of timing, you suspect that after the Feb-March NPC meeting, which is the National Policy Committee meeting, that's when you should start to see a lot more movement on this. That's sort of the summary of the bigger picture. I have a second question here, right? Can you talk to me a little bit about how these toll road stocks, which you have identified, how have they performed this year? Because the markets have done quite well, especially in the second half. What's been their performance, and are we sort of late to the theme? Are we early to the theme? Could you give a sense there?
Well, I think everybody understand that in the first half, actually, they have been performing better because of the waiver of the toll collection between February and May because of the COVID-19 issue, but they have actually since then resumed in terms of the toll collection. We have actually seen that many toll road companies, they have the traffic already go back to year-on-year growth in third quarter of this year. So the share price, actually, many of them has already picked up. But so far, what we see is that they're still yet to going back to the pre-pandemic level. This is one thing. And the other thing is that it's still, as you can see, that they're still underperforming quite significantly relative to the new economy stock, which I think, as you know, the new economy stock is basically very overcrowded in terms of the trade. So I believe that next year, when especially in going into the first half or probably later first half, we are going to see very good numbers on a year-on-year comparison. And also note that one thing is that most of these companies are having a very strong cash flow. And that means that, for example, like the dividend payout, they will be able to maintain the dividend payout even though the toll collection has been weak in the first half. And that, for example, like Zhejiang Expressway, something like close to 5 to 6% in a normalized yield. That was actually able to be maintained. And the other thing is that what we can see is so far, people have been underweighting in terms of this sector, but with the REIT information moving in, you will see the overall discount to NAV. Some of them, like even you talk about like those smaller ones, Anhui, as well as Sichuan, they're talking about just 0.3, 0.45 price to book, which actually they should price to NAV on. And actually, they should have quite good room to catch up once the REITs are issued, and then they are able to realize the underlying value of the toll road assets.
Cool. Osbert, I know you've got to run. I've got one last question. You can answer it very, very quickly. It's coming in from one of the attendees. They're saying the FT is running a front page story right now, talking about the insolvency or solvency of the local government financing vehicles in China. And there's been sort of defaults. Frankly, it's really old news. I've been hearing this for like last 8-10 years in China. But from the thematics perspective, do you see any risks, especially on some of the highly geared projects? How do you see this playing out?
Well, I think, first of all, I think if you look at the LGFV financing situation, most of what we see is that in terms of some recent news about the default of the state-owned enterprises, most of them are actually local state-owned enterprises. They are very much in the more competitive industry, or what we call as commercial industry, rather than those what we call as like a utilities industry, which is actually very essential to the daily use of the residents. So this is actually similar to the toll road company. This is one thing. And the other thing is that the overall traffic, as so far, they have actually started to recover. And what we see is that they have been able to regenerate strong cash flow. So this is one thing that we are comfortable in terms of the future for the companies. And lastly, even though you have seen some of the default of the LGFV in terms of the bonds as well as the tight financial position, the record issuance of the special purpose bond in this year, most of the special, put it this way, it's actually all of the special purpose bond are issued by the local government. So in that case, actually see a very good reception of the special purpose bond by the investment community. That means that basically in terms of the quality projects that are invested by the proceeds from these special purpose bonds issued by the local government, still well received. What it means is that they still have strong confidence in terms of essential projects of the local government. So I would say we have to distinguish about those competitive industry, commodity industry that's actually not operating in a commercial environment relative to those actually provided they need essential necessity for the local residents. So that's actually two different types of industry that we have to keep in mind.
Got it. Osbert, feel free to run now. I'll take it over for the last section, but thank you very much for joining us from Shanghai today.
Thank you.
Bye-bye. Cool, guys. So very different to the PC partner idea, which is super high beta, super cyclical, And of course, the toll road idea is about a defensive, very, very defensive industry, very high yielding stock, 6, 7, 8% dividend yields, fairly mature toll road assets. I'm going to move on to the last section today, which is titled Why Almost No One is Positioned for the Recovery. I know that you guys, some of you have questions on PC Partners. We'll get to them in about 5 minutes time. So just hold that thought. Let's talk about recovery. So this is based off of work done by Stephen Holden, who runs Copley Fund Research. And what Copley do is they look at positioning data. So they look at what every fund manager owns or does not own in their portfolios. How does that compare to what's in the main benchmark indices? And where the biggest risks or opportunities lie. So we took a very close look at this as we were thinking about positioning for recovery or lack thereof. So as you see in this chart, there was extreme crowding by all fund managers into COVID. So pretty much everybody went overweight just 3 sectors of the market, which is discretionary technology and consumer services. And almost everybody sold out of financials. So while COVID in reality was about avoiding crowds, but when it came to stock markets, everyone really is crowded in very few spaces. If you look within that financials underweight, you will notice that bulk of that is coming from just banks. The other subsectors of financials are very much sort of in the neutral territory, but banks was what really got shunned during this period. Now, there's always the question, are you talking about 2 people, 3 people, 4 people? What's the universe? What are you looking at? So Copley actually looks at all benchmark funds that are out there on a global basis, but within emerging markets, they look at about 400 of the largest ones as well. So it's a very, very large and representative universe. And what we saw was that this movement was not done by 1, 2, or 3, but pretty much across everybody. It was very similar trends. Everyone sort of sold out of financials all at once. While on the other hand, something dramatic happened. Only 4 funds out of the entire universe were more than 5% away from their highest ever holding in tech. That's insane. So literally, there's just 4 managers in the entire world who did not go to the record highest weighting in tech. Everybody else did. So this is how crowded some of these 3 sectors are at the moment. So if you want to be contrarian and you want to think about positioning for a recovery and so forth, this clearly draws attention to financials and to banks and so forth. And some of the fundamental analysts on Smartkarma that cover banks, these include the likes of Daniel Tabush, who used to be the head of bank research at CLSA. They've been talking about a profoundly bullish thesis on banks in recent months. They're talking about collapsing credit costs, interest margins that are bottoming out, risk premiums that are collapsing, valuations that are at decade lows, and positioning that's just not there. Nobody owns these stocks in the way they should be at the moment. And fundamentally, the question then is the portfolio risk about what you currently own or what you don't? And we don't just look at this fundamental thesis. We also look at whether it's showing up in data. So if you look at this chart, this is a chart from one of Daniel Tabush's insights, and it's showing the provisioning level of JP Morgan. This is not a small bank. It's one of the largest banks that was at the center of the pandemic in a way, and very systemic to the US economy. And what you can see is as the year progressed in Q1 and Q2, the bank proactively elevated its provisioning levels, its credit costs to super dramatic levels, 8 to 10 times what they normally do in a quarter. But you know what? GFC did not happen, actually. Actually, central banks stepped in so quickly that asset values did not fall, stock markets did not crash, and lo and behold, end of Q3, early Q4, we're talking about vaccines being introduced. So as a result, the bank is actually bringing its credit costs all the way back down, even lower than the levels we saw coming into it. So the dire days from a bank earnings perspective are behind us. It's clear that now, slowly but surely, governments are starting to reopen certain economies. I know Nick would want them to open much more faster. growth can resume. And I think that sets the stage for a normalization. And then finally, I think this is a beautiful chart. It's a very dramatic chart, but it really captures just how polarized positioning is. This is the mean reversion that one can expect over the course of the next 12 months, where you will see money starting to move out of some of these big tech companies and back into financials, which have really suffered in 2020. And you know what, we might be starting to see that because in November, for example, I think banks started to do quite well, whereas big tech didn't really move. You know, Amazon has not made new highs since July. A lot of the work from home winners like Zoom and all are actually underperforming. And you know, recent news such as Facebook's news overnight talking about antitrust issues and breaking up the company, you know, they will be very powerful catalyst towards this potential mean reversion. So this is what we wanted to display, just a completely different facet of what Smartkarma brings to the table. You know, we've looked at a small cap, we've looked at a large cap thematic, and we've also looked at a real asset allocation decision that investors are faced with at the moment. We'll take more questions. We can make it interactive. I can, you know, if you raise your hand using Zoom, I can allow you to speak. But maybe I'll go back to a question on PC Partners that's been asked. Nick, if you don't mind, one question is, look, the stock was at about $1, you know, earlier on in the year, mid-year. It's run up quite a bit. Is that it? Is it done? You know, what's the upside? Are we late? That's one of the questions. And the other question is, are there competitors? Are there peers? What can we look at when we look at valuations and metrics? Nick, you're on mute. Sorry.
Sorry, can you hear me now?
Yep.
Yeah, so I think there's more upside ahead. I think the market just needs to rediscover this company again. I mean, you see in the last couple of weeks, you see higher volumes. It's ticking up little by little. You know, so I think this is just a re-rating process which has just started. You know, for me, this is minimum worth at least $3 Hong Kong. But you know, if they start to perform, even if you do a 6 times earnings, you go to 3.6 Hong Kong dollars. So still think that leaves good upside. You know, next month you'll have a clear catalyst when they announce the profit alert, and then you should get a very good dividend come March when they announce their full year earnings. So I see, you know, this is not buy and hold kind of stock for the next 5 years, but I do think you know, the coming 6 months is going to be quite good for the company, and if Bitcoin stays here or goes even higher, you know, the market will all of a sudden in Hong Kong can do those you know, leaps forward if people start to think it as a hot stock, which happened a few years ago when people saw it as a Bitcoin proxy in Hong Kong. So I think the market just needs to rediscover that once again. Then you do have peers. You have quite a few Taiwanese companies which do exactly the same that they do. So they are listed and they trade at much higher multiples. So that's yeah, that's you know, something to look at.
Any names? Maybe 1 or 2 names of the Taiwanese companies.
Well, I would have to go and look at my notes here. It's in one of my insights as well, but I don't know on the top of my head. I forgot. All
right, no worries. But you know, maybe just post it as a comment on the platform, and then
yeah, I will.
Perfect. Thank you. Any other questions today, guys? I know we're 4 minutes over time already, and we like to keep it pretty tight and rapid fire, but maybe we'll take the last 1 or 2 questions if there are any. Okay, cool. I don't see any more questions streaming in, so we'll call it a day. Thanks very much, Nick. Pretty funky as always. It's PC Partners is not for the faint of heart, but at the same time, as you mentioned, there's catalysts within weeks. So there's a good setup here. If not, if you want something a little bit more boring and timid, go buy a toll road in Hong Kong, potentially. Or if you're a much more macro investor or thinking about allocating amongst an ETF or something, then financials clearly real stand out based on what positioning data is telling us. But for all the attendees, thank you very much for joining us. Let's talk again in a week's time. These are meant to be short, swift, interactive. So keep the questions coming between now and next week. One last thing though, next week's session will probably be the last session for 2020 before we break for Christmas, but we will be back live in January after that. Thank you very much. Bye everyone. Bye Nick.